In just 13 years, Bitcoin's market cap has gone from zero to over $1 trillion. This has made it the best performing asset to have ever existed, and it still has lots of room to grow. However, retail money coming from the pockets of people like you and me will only take Bitcoin so far. Most of the money in existence is held by large institutions and investors who remain skeptical of Bitcoin despite its adoption by publicly traded companies such as Tesla and MicroStrategy. What these legacy investors are waiting for is a way to hold and trade Bitcoin with the same security and protection they get with the other assets they handle. In the case of Bitcoin, this would require an ETF, and after almost 5 years and dozens of attempts, a Bitcoin ETF is finally in full view on the horizon. Today, I'm going to explain what an ETF is. I'll look at existing Bitcoin ETF candidates and tell you why a Bitcoin ETF could send Bitcoin's price to all-time highs beyond our wildest dreams. Not so fast. There are some things I need to say to cover my ass. Firstly, I am not a financial advisor, so nothing in this video is financial or investment advice. Second, I hold Bitcoin as part of my cryptocurrency portfolio, which I hope doesn't come as a surprise to anyone watching. If it does, then you must be new here. My name is Guy, and I would like to welcome you to the Coin Bureau. This channel is ground zero for everything crypto. News, reviews, exchanges, regulations, and market analyses are just a few of the flavors on the menu. If this proposition appeals to your palate, press that subscribe button and ping that notification bell so you get these videos while they're piping hot. If you're a picky eater, you can use the timestamps in the video timeline to teleport to the sections that make you salivate the most. That said, there's a lot of important information in this video that you need to know, so do your best to watch the whole way through. Right, ready to rumble? Me too. Let's see what all this Bitcoin ETF stuff is all about. ETF is short for Exchange Traded Fund. ETFs have only been around since the 1990s and were invented to combine the best features of two other popular investment vehicles, stocks and index funds. As most of you will know, stocks represent shares in a company. This means that when you buy Tesla stock, you technically own a part of Tesla. Holding sufficient stock can give you voting power as to how a company is run, which is why many companies and CEOs try to hold on to more than 50% of their shares. Some stocks also pay dividends, which is a portion of a company's profits that get distributed to all of its shareholders on a quarterly or yearly basis. Stocks trade during the trading hours of the exchanges they're listed on. In the case of the New York Stock Exchange, the hours are from 9:30 a.m. to 4 p.m. EST, Monday to Friday. By contrast, index funds basically track the performance of a basket of assets, be it stocks like Tesla, commodities like gold, or government bonds. Index funds are convenient because they let you buy a small fraction of each of the 500 stocks in the S&P 500 in a single transaction, instead of having to buy one entire stock from all 500 companies one by one. Index funds are passively managed, meaning the fund managers simply buy and sell the assets in the basket based on the demand from the people investing in their index fund. This is in contrast to mutual funds, which are actively managed, meaning the fund managers are actively trading and switching between different assets behind the scenes to maximize profits for investors. Unlike stocks, index funds can only be traded once per day during market hours. ETFs take the best of both worlds by creating an asset that trades like a stock but has exposure to one or more assets like an index fund. There are almost 10,000 ETFs trading on nearly 80 exchanges around the world. I wasn't able to find the most up-to-date figure on the market cap of all ETFs, but it is somewhere in the neighborhood of $8 trillion. ETFs are also very liquid, with over $30 trillion of ETFs being traded every year in the United States alone. ETFs are considered safe investment vehicles because they're subject to stringent regulations. Most of these ETF regulations are set by the Securities and Exchange Commission, or SEC, which is also the authority ETFs fund need to register with if they want to list on an exchange. Dozens of companies have tried filing for a Bitcoin ETF in the United States since the last bull run, and all these applications have been rejected so far. I'll get onto the reason why later on. First, I need to address the elephant in the room, the Grayscale Bitcoin Trust. The Grayscale Bitcoin Trust was incorporated back in September 2013. Like the Bitcoin ETF, the goal of the Grayscale Bitcoin Trust is to provide a way for legacy investors to get safe exposure to Bitcoin. This is done by investing in GBTC, which is a publicly traded share of the Grayscale Bitcoin Trust that went live in May of 2015. Since that time, Grayscale has stacked over $36 billion in Bitcoin due to the insane demand for GBTC. Grayscale also has an Ethereum trust and recently incorporated trusts for other altcoins such as Chainlink, Decentraland, and even Monero. This might leave you wondering why we even need a Bitcoin ETF or an ETF for any other crypto for that matter. That's because GBTC is not at all like an ETF. GBTC functions quite literally like shares in a company, in this case, the Grayscale Bitcoin Trust. ETFs also have shares, but these shares are created or destroyed based on the supply and demand for the asset or basket of assets they represent. This is done to make sure that the price action of the ETF mimics that of the assets it's tracking as closely as possible. For example, when people buy shares of a Bitcoin ETF, the fund will go out and buy actual Bitcoin while creating new shares representing that Bitcoin. When people sell shares of a Bitcoin ETF, the fund will go and sell the equivalent amount in Bitcoin and give those investors their dirty fiat. Ugh. Grayscale doesn't get this luxury with GBTC because they're not able to create or destroy these shares without first getting approval from the SEC. This adds a second layer of price volatility to an already volatile investment. For most of GBTC's existence, it's been trading at a huge premium. This premium means that the market cap of GBTC has historically been much larger than the market cap of the actual Bitcoin being held by Grayscale. To understand why this is a problem, consider the following. Suppose you're holding GBTC at double the price of what it should be based on how much BTC Grayscale is holding. In percentage terms, this is a 100% premium. You might be okay with this if the price of Bitcoin has been steadily climbing, but let's say Bitcoin's price suddenly crashes by 30 to 40%. Instead of seeing a 30 to 40% loss, you could see up to a 130 to 140% loss on your investment because you're losing the BTC loss in addition to the inflated GBTC premium. This has made GBTC a less than ideal investment for many, and its popularity was primarily due to the lack of any viable alternatives that don't involve buying crypto directly. GBTC seems to have fallen out of favor as of late, as it recently began trading at a 15% discount relative to the amount of BTC in Grayscale's coffers. This seems to be because of the first North American Bitcoin ETF, which launched in Canada earlier this year. Purpose Investments listed 3 Bitcoin ETFs on the Toronto Stock Exchange on February the 18th. In just over 2 months, they've amassed over $750 million worth of Bitcoin, which is not too shabby when you consider the disastrous state of the Canadian dollar. Sorry chaps, needs to be said. Anyways, the crazy thing about the Purpose Investments ETF is that the BTC they buy is held by the Gemini Trust, and $200 million of that BTC is insured. Moreover, Canadians can protect their BTC gains from the taxman using this ETF because it's compatible with 2 tax-free savings accounts available in Canada. The only downside here is that this ETF carries a 1% annual management fee, which is incredibly high for an ETF and could hurt Bitcoin hodlers. That high management fee won't stick around for long though, because additional Bitcoin ETFs from Evolve and Galaxy Digital are now trading on the Toronto Stock Exchange as well. This competition should reduce the management fees for Bitcoin ETFs as they become more popular. The success of all these Canadian Bitcoin ETFs has put the heat on US regulators, who are currently being bombarded with at least half a dozen Bitcoin ETF filings. I count 4 US companies that have filed with the SEC for a Bitcoin ETF since the start of the year. The first is VanEck Investments, which was the first firm to take a swing at a Bitcoin ETF and is trying again with the help of the Chicago Board Options Exchange. The latter is already trying to get permission from the SEC to list VanEck's Bitcoin ETF, even though it has yet to be approved. The second is Valkyrie, a Texas investment firm that has been trying to get an ETF through the gates of the SEC for years. The third is the New York Digital Investments Group, which has filed for a Bitcoin ETF with the support of Morgan Stanley. And the most recent is Wisdom Tree Investments, which is actually a publicly traded company. A Bitcoin ETF is just one of the many crypto-related filings Wisdom Tree has made over the last year. And even Valkyrie is trying to squeeze through an ETF that would track the stocks of companies that hold Bitcoin. Although it's yet to be announced, I think the fifth filing for a Bitcoin ETF this year is going to come from Grayscale. This is because Grayscale announced that they were looking to hire ETF specialists earlier this month. And Grayscale CEO Michael Sonnenschein also noted in a recent interview that a Bitcoin ETF is on the table. Gemini seems to be taking a different approach to a Bitcoin ETF after their application was rejected twice by the SEC. Gemini Fund Solutions is hoping to provide the same sort of custody and clearing services that it currently provides to Canada's leading Bitcoin ETF in the United States. This is a good move, given that US regulators are now able to see that Gemini is more than capable of playing this role. Like resistance on a cryptocurrency's price action, there's a sense that each of these filings is pushing the SEC to let one pass the gates. This leaves us with two questions. When will we see a Bitcoin ETF in the United States, and what will it mean for Bitcoin's price action? As far as I can tell, there is really just one reason why the SEC has repeatedly rejected demands for a Bitcoin ETF, and that's because Bitcoin was not, quote, a mature asset. I reckon this is a reference to Bitcoin's volatility and the fact that it did not have a very large market cap compared to other assets until late last year. ARK Investments CEO Cathie Wood believes Bitcoin won't get an ETF until its market cap hits $2 trillion, which is around $110K per Bitcoin. More importantly, Bitcoin was not really held or handled by any meaningful institutions or private investors until recently. This has changed very quickly over the last few months, and there's no shortage of announcements that I can point to. But one of the most significant was PayPal's announcement that they would be supporting Bitcoin and other cryptocurrencies. A report by Pantera Capital reveals that PayPal alone bought up 70% of all newly mined BTC in February this year. And this is even though cryptocurrency support is still only available in the United States. PayPal's next stop is the United Kingdom, and as a proud Englishman, I can tell you that demand is going to be just as high. Tesla's Bitcoin purchase was another major milestone for the cryptocurrency space, and many believe that it's only a matter of time before we start to see similar announcements from other high-profile companies. Even banks are starting to get into the crypto game, and their own internal reports and surveys are revealing that a substantial percentage of their clients have exposure to crypto already, and many of those who don't are considering it. I actually covered this institutional adoption of Bitcoin in quite a lot of depth in my recent video on it. That's linked to in the top right of the screen. I suspect that the only thing stopping these folks on the fence is the absence of a Bitcoin ETF. After all, it was only after Canada launched its Bitcoin ETF that billionaire Kevin O'Leary allocated 3% of his portfolio to BTC. This is significant because Kevin was an adamant no-coiner until earlier this year. While some no-coiners like Peter Schiff have yet to cave, I think he can see the writing on the wall now that his son has gone all in on Bitcoin. Now, even with all this adoption, I wasn't all that sure that we'd see a Bitcoin ETF this year. That was until I saw the recent news that Gary Gensler had been confirmed as the chairman of the SEC. For those who don't know, Gary is also an MIT professor who specializes in blockchain and digital currencies. This is good news because it means there is finally someone in a position of power in the United States who actually understands Bitcoin. With Gary at the helm of the SEC, I think it is extremely likely that we will see a Bitcoin ETF this year. If you're wondering how a Bitcoin ETF would affect the price of BTC, the short answer is that the gains would be ungodly. There's a silver lining to this, though. As many of you know, it's normal for the price of a cryptocurrency to spike when good news comes out. When the actual thing the news was talking about happens, however, it usually does almost nothing for the price of that crypto. This is where the idea of, quote, sell the news, buy the event comes from. The mere announcement of a Bitcoin ETF would certainly send the price of BTC through the roof, but depending on where we are in this bull market, it could very well signal the top for this cycle. After all, it's what the opening of the CME futures market signaled for Bitcoin in 2017. I know there are many people who think that Bitcoin will enter some sort of supercycle, but I think that's wishful thinking. This is because at the end of the day, most of the people invested in cryptocurrency are irrational and emotional, and legacy investors, quite frankly, have no idea what they're in for. As I explained in a recent video about what influences Bitcoin's price action. The chain of events that will happen when a parabolic run caused by an ETF announcement starts to slow will cause one of the largest crashes the world has ever seen. People think this will be dampened by institutions who will hold or buy the dip, but nobody has diamond hands when the dip is deep enough. This is apparently another one of the concerns the SEC has about approving a Bitcoin ETF. If Bitcoin was to go to 400k, then crash down to 4k, you can bet that all of those legacy institutions and investors will want to burn down the SEC building, if they don't already. Even if a crash like that doesn't happen, regular markets trade during the day, whereas cryptocurrency trades 24/7. This could lead to a whole host of other issues for price discovery and volatility. Us crypto hodlers know that volatility is part and parcel of the crypto market. And even though institutions are aware of this volatility, they have yet to experience it on the scale that many of us have. And it's not just regulators who are worried about the effects of a Bitcoin ETF either. Believe it or not, there are actually many people in the cryptocurrency space who think a Bitcoin ETF is bad for Bitcoin in the long term. One of the most outspoken critics of a Bitcoin ETF has been Andreas Antonopoulos, who argues that institutions will start to manipulate the price of Bitcoin in the same way they are apparently doing with other store of value assets like gold or silver. Moreover, if the Bitcoin blockchain was to fork, the institutions behind these Bitcoin ETFs would have a lot of say when it comes to deciding which fork gets adopted. In a worst-case scenario, these institutions could push for a fork that would eventually turn Bitcoin into a corporate asset. Most importantly, a Bitcoin ETF goes against the purpose of cryptocurrency, which is to replace the current financial system, not become a part of it. Self-custody and self-ownership are also core crypto values that get completely thrown out the window with a Bitcoin ETF. Now, you might laugh at these concerns, but they are really something to think about. Having someone else custody your funds might be convenient and even safe, but to be truly financially free, you must be willing to take on the responsibility that comes with that. As bullish as I am about a Bitcoin ETF, I can definitely sympathize with the concerns Andreas and other crypto heads have. I am a bit more optimistic, however, and I think that Bitcoin can still have an ETF without getting fully sucked into the financial matrix it was designed to help us escape from. In any case, it's going to be one hell of a ride, and at the end of the day, that's what it's all about, right? If you enjoyed this video, you know what to do. Smash up that like button and be sure to subscribe to the channel if you haven't already. YouTube is just one of the many places where you'll find me. And if you want to tag along on my daily shenanigans, you can follow me on Twitter, Instagram, and TikTok, where Macy documents my every move. I also share daily updates about the crypto market on the Coin Bureau Insider Telegram channel, and I dish out the details about all the tools and tricks you need to make the most of this crypto market in my weekly newsletter. If you want to steal my look, you can do that by shopping at the Coin Bureau merch store. Every dollar you spend there goes towards expanding the reach of this channel and the other channels that I'm starting to put together. You'll find links to my socials, newsletter, and merch store in the description. Here endeth the lesson for today, folks. Props for making it this far. I'll see you in a sat.